The Trump tariffs have gone into effect and the markets are not liking it. The stock market is down, other assets like Bitcoin are down, and an industry that is going to take a big hit from these Trump tariffs is the auto industry. The Trump administration recognizes this and they actually gave the auto industry a 1 month exemption from these tariffs, but the inevitable is coming. These tariffs are going to hit the auto industry, which imports a lot from Canada and Mexico, and it is going to have a serious impact. It's going to lead to higher prices and some other things. So that is what we are going to be talking about today in this video. Before I do get into it, please make sure to like the video and also subscribe to the YouTube channel. Really appreciate your support. I'm also going to put a QR code down below for a Bitcoin tip. If you want to support the channel, feel free to leave me a little Bitcoin tip. And then we also got a little sponsor for this video, Chillwell. If you're in the Oregon area, the Bend area, and you're looking to get a nice cold plunge or a nice float, head on over to Chillwell. It's a great place, one of my favorite places to go and relax, spend a nice day on the weekend. So check them out. They're in the Bend, Oregon area. Now let's get into it. After Trump won the election, there was a lot of positive sentiment in the markets. We all remember it. Bitcoin was shooting up to all-time highs. The stock market was shooting up higher. But after a couple of weeks of this positive sentiment settling in, people started to realize that this idea of tariffs was becoming more realistic, and aggressive tariffs are not going to be good for the stock market. It's going to make it more expensive for companies to produce the goods and services that they sell. And because of that, they're going to have a tighter profit margin. It's going to lead to a lot of companies having to raise their prices. And some of these companies that are going to be really affected are companies that import a lot. And the automotive industry imports a lot. When we look at companies like General Motors, Ford, Stellantis, these companies import a lot from Canada and Mexico and China as well. So with these tariffs, it's going to make it more difficult for these businesses that really have not been performing that great in the 21st century. When we look at the whole stock market, I would say that companies like Ford and General Motors have kind of underperformed. Let's take a look at a couple of charts here. This first chart shows the performance of Ford over the past 50 years or so. And as you can see, leading up to the 21st century, Ford went on a nice little rally along with a lot of stocks kind of leading up to that dot-com bubble. But ever since we've moved into the 21st century, Ford has not performed that great. It's been kind of baseline, heading up and down, but really not making many big gains over the past 25 years or so. If we look at a second chart, this shows GM. And since GM went public around 2010, 2011, we could see that the company hasn't really seen a lot of growth in their stock. They've gone up a little bit, but when you consider how much most stocks have gone up over the past 15 years or so, GM has underperformed. Now, the Trump administration has given automakers a 1 month exemption from these tariffs, and that's because the Trump administration understands that these tariffs are going to be particularly tough on the auto industry. When we got this news of the 1 month exemption, we saw stocks for companies like Ford, GM, Stellantis, and Tesla shooting up a little bit from that relief. But reality is going to set in a month or so, and I think that a lot of these auto companies are going to take a hit. If we look at General Motors, for example, GM produces a variety of their vehicles in Mexico. They produce the Chevrolet Silverado, the Chevrolet Equinox, and the Chevrolet Blazer in Mexico. They also import parts from Mexico, like engines and transmissions. They also import those parts from Canada, and they also import sheet metal and stamp parts from Canada. So a company like GM is very reliant upon imports from Canada and Mexico, and these tariffs are going to have a negative impact on them, along with some of these other traditional automakers like Ford, Stellantis, and others. And I actually saw a stat while reading a Forbes article on these tariffs and their impact on the auto industry. And in 2024, Michigan imported $46 billion worth of goods and services from Canada, and they imported $69 billion worth of goods and services from Mexico, and this was mostly for the auto industry. So I think this industry is really going to take a hit, and they're going to have to find ways to manage these increased costs, right? They're probably going to have to raise their prices for their vehicles, and they may have to make cuts in other areas, and they may have to rethink their supply chains. They're going to have to ask themselves, do we really want to pay this 25% tariff or whatever it is, or do we want to move production more back to the United States? What's going to be the most cost-effective strategy for us? With higher expenses due to tariffs, it is expected that most of these automakers are probably going to be raising their prices. When you have higher expenses and you want to maintain your profit margin, what do? You raise the price, right? You pass that cost on to the consumer. So if you're looking for a new car, it is probably about to get a little bit more expensive. And when we look at the car market here in the US, new cars are already pretty darn expensive. According to CarEdge.com, the average price of a new car is $48,641, and the average salary here in the US, according to SoFi, is $66,622. So for most people, buying a new car isn't realistic, right? If you're making 65 grand a year, you're not going to spend 50 grand of that on a car. So it'll be interesting to see if these automakers really can raise their prices, right? Like, are they going to push out more of their customers? It seems pretty unrealistic for most people here in the country to buy a new car right now. And then when you look at the interest rates that are decently high, it looks like for a car loan, they're typically between 6 and 7%. It's just difficult to do, right? So I think that with car prices going higher due to these tariffs, we'll see if that actually happens. You're going to see a lot of people looking for alternatives, whether that's used cars or just finding different ways of transportation. I live in a city where it's not that big, it's pretty easy to get around, and I'm sure that in smaller cities, people may be looking at something like a bike, right? Just to get around, or just using these rideshare services, because people can't afford to buy a car at $50,000. So that is one option for these automakers. If they want to maintain their profits, they can try to raise prices, but there's no guarantee that they're going to see the same amount of customers at higher prices, right? If they raise prices, they may push more customers away and into alternatives. Another thing they can do is cut costs. They can find ways to trim expenses in other areas. They can lay off employees, they can cut divisions, they can cut side projects. And when we look at a lot of these traditional automakers, I showed you the charts earlier for Ford and GM. These companies haven't really been competing that well with some of these newer car companies. And it brings about the question, do these companies really have a place in the future? Can they compete as we head into this more high-tech world where we're seeing these high-quality hybrids and these sort of smarter cars, these high-tech vehicles, cars that can drive themselves? We'll have to see what the car market looks like in 20 years if we just have all these self-driving cars. And for companies like Ford, can they really stay competitive with these high-tech cars and these new companies like Tesla? Now, we've talked about a lot of the negatives of these tariffs for automakers, but let's get into some of the positives. The main positive is that this may lead to some of these automakers moving production back to the United States. And with that, that could create more jobs, right? It could help the economy grow here and help us become less reliant on some of these other countries that we're currently over reliant on. Now, with that said, when we look at the auto industry, it is changing a lot, right? It doesn't look like it did 75 years ago. When we look at these companies, they're looking to automation for a lot of these assembly line jobs and these factory jobs that used to be performed more by people. So I think this is going to have a good impact on the labor market when it comes to more of these white collar jobs that we're seeing with the evolving auto industry. But I don't think it's going to bring back as many of these blue collar jobs that we used to see so prevalent in the auto industry, because the industry is changing. These companies are realizing that they have to embrace AI and automation in order to stay competitive. So I think that some jobs that we could see emerge with some of these companies moving production back to the United States are these engineering jobs or these sort of maintenance technician jobs, but not so much these factory positions that we've seen in the past. And we actually saw that Honda is going to be producing their Civic Hybrid in Indiana instead of Mexico following the news of these tariffs. So we could see that these tariffs are already having an impact, and these companies are starting to rethink their supply chains, rethink if they want to do production in these other countries or if they want to move it back to the United States. And that is the ultimate goal here for this administration. They want to see the U.S. Importing less, and they want to see the U.S. creating more. They want production to be here in the United States so that more jobs are created and we can see the U.S. GDP rise. So I understand the strategy behind these tariffs, but it is going to be interesting what the damage is going to be in this transition process, and if these automakers can really compete and handle this big change. You also think about the impact on other countries, right? When we look at Mexico and Canada, these are two countries that are very reliant upon exporting to the United States. And if these companies, these auto companies, start to move all their production back to the US, what impact is this going to have on their economy? So I think that we are definitely going to see these countries, look to combat these tariffs. I think that maybe Canada already put retaliatory tariffs in place, but this is going to have a negative impact on Canada and Mexico as they try to handle this change and realize that they may be losing some of their business to their best customer, from their best customer, right? The United States. So all very interesting stuff. I'm very interested to see what happens with the stock market and all these auto companies over the next 6 months or so, and if they can really handle this change. Hopefully it has a positive impact, but we will just have to see. Things are looking a little dicey right now in the stock market, and I think that we could see some bad before we see some good from these tariffs. That's gonna wrap it up for this video. If you didn't like and subscribe, please make sure to do that now. Thanks for watching. I'll be back soon.